FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue the pattern series, we get to the type 3 patterns. And so this is my favorite type of pattern to trade. Most of my trade setups that I take are type 3 patterns, and I absolutely just love them. So hopefully you'll find some value in breaking down type 3 patterns. Guys, if you've liked this series so far, please give the video likes, subscribe to the channel, and share the content, guys, so we can keep growing this community of traders. But without further ado, guys, let's get right into our next video in the pattern series, which is the type 3 setup. Let's go.
So type 3. So what is a type 3 pattern? Type 3 patterns are pretty simple. It's basically a pattern that gets stuck in the middle of the range. So I've gone ahead and just put a line through the middle so you can see what I'm talking about. So basically what you'll have is you'll see price basically comes down, gets stuck, and then it goes up. Okay, or price will come down. It'll basically make a W going up or an M going down. But the key component to this is that it basically gets stuck in the middle of the range. It seems like there's like an invisible wall in the middle of the range, and for no matter what it tries to do, it can't get past it. So I'm going to draw this again here for you. Basically, it's like this. Works, comes back, and then it goes up. This one starts to go down, and does that. That's it. That's all a type 3 setup is. Now, some very important characteristics of a type 3 setup and things that I want you guys to be aware of, because you will see this happen. So I don't want you to get caught up into this bad trade stuff. Is if you ever see price that does this, goes up, down, up, down, up, down, up, down. When it gets towards the end of the Asian range, it comes out of the middle like this. This is not a type 3 setup. Okay? If you see anything that's coming out of the Asian range and it's coming out of the middle of the range like this, that's not a type 3 setup. Okay? Type 3 setups are developed from coming from the top to the bottom. So they're developed by basically getting stuck and then going down. So for a type 3 setup to be valid for us, we need that type 3 setup to come down to the bottom and then come back up and get stuck. Okay? Very important, because you will see that, and I'm going to show you some different examples of all of these in live charts so you can know exactly what you're looking for the different type of setups. Okay? But I just want you to realize that a type 3 setup has to come from the top and get stuck, or the bottom and get stuck. It cannot start from the middle. Okay? It cannot start from the middle. All right, so it can't do this and then go. It cannot do that. Will it do that? There will be some that do that, yes. but that's not a type 3 setup that we're looking to trade. So right now, the only differences, right, is essentially between the type 1, 2, and 3 is where it gets stuck at, right? So type 1 setups, we want basically to be pushed away from the initial high and the initial low of the day inside of the Asian box. The type 2 setups basically get stuck at the top or at the bottom of the initial high or low of the day. And type 3 setups, they start out, a type 3 setup actually starts out as a type 2 setup, right? As a W here. The only difference is that it gets stuck and it reverses and goes down, right? Same thing. It's basically an M that gets stuck and it reverses. All right, guys, so let's go ahead and take a look at some type 3 setups so you can see exactly how they develop in the actual charts. And I'm going to show you some really good examples of what they look like and what they should not look like. So this first example here, let's go ahead and play this out so you can see what we're dealing with. So right here we have a 45 pip range so far for the Asia, right? So you can see that basically price comes out, goes right to the middle, gets denied, and starts to work its way back up. Now I want you guys to pay attention here to what happens. Now, what do we have here, guys? What does this look like so far? This looks like what? A type 2 setup, right? So you basically have price comes down, goes up, makes an M here, and then you're looking to trade that back down, right? So here's the thing, okay? If you get into this trade, it's completely fine because that's what you're seeing, right? There's other factors, of course, where the EMAs, did you get a crossover and all that stuff, but let's just pretend that you get into, you know, something like this. Remember that when I say that type 3 setups, typically they will come from type 2s. They will transform from a type 2 setup into a type 3 setup. And so this is a good example of that because this looks like a very good type 2 setup. But as we play this out, you'll see that once we get to the middle of the range, look what happens. We get rejected, right? And as soon as we get rejected, look. You see that? That is a type 3 setup. You see how when we get to the middle of the range, we get rejected, and we immediately go up. So this range here is about 72 pips. That's the US box there. But you can see essentially what happens. Look. And then look where we go up to. This orange line here is a previous week low. This yellow line here is yesterday's high, right? So are these coincidences, or this is just how price behaves? You see what I mean? So all these things, guys, you have to take into account all these different factors, right? But I'm telling you that if you back test, this is the way that you actually get to see this and learn it and ingrain it into your brain, right? But this is a really good example of a type 3 setup where it starts out as a type 2 setup where you see a clear, you know, first leg, second leg drops, but look, it gets stopped in the middle of the range. If this was really a type 2 setup, okay, and if this is really the high of the day, there is no reason for this to stop here at all. It's just going to continue on its way down. Okay? So as soon as you see this, that should be a light bulb going off in the back of your mind. Like, hey, wait a second. This is actually a type 3 setup. All right, let's take a look at a couple more examples. All right, so in this example here, the Asian range is 32 pips. Now I want you to see what I'm talking about when I mentioned that on type 3 setups, we don't want them to come from the middle of the range, right? We want them to come from either the top or the bottom, right? So here's an example of what I'm talking about when they come out of the middle of the range, right? You see price comes out of the middle of the range. So this ideally is not going to be a good setup that we're looking for, because we want price to come from the bottom to the top, get stopped out, and then continue on. So as we can see here, here's our move to the bottom, right? And then look what happens. We go back up, and what happens? We're getting stopped out here. Do you see that? Boom. So look, basically had a move down, a move up, move down, move up, and move down. Do you see that? Okay, so this is what I'm talking about when we want our type 3 setups to have to come from the bottom, get stopped out, or from the top, get stopped out. We don't want this to come from the middle like this. Okay, so we wait for this to happen. And then, of course, essentially what happens here is you get the move down. So let's take a look at this example here for us, and let's play this out. I want you to notice a couple things as we watch this. So we come from the bottom all the way to the top, right? And now look what happens when we're here. Do you see that? Do you see basically like how we're just basically moving straight sideways, essentially within, let's say, what is that, about a 10 pip candle every candle? Do you see that? And then we finally get this move here, go up, but look what happens. Come right back down. Right back up, right back down. Do you see that? Whenever you see this happen like this, all that is happening here is we're basically collecting contracts. Okay? We're just collecting contracts. They're trying to get traders into trades. And so look what happens here at the very end of our window here. We actually get an opportunity, and it's going to come right there. Okay? Now, the problem, one of the probably the biggest things that you're probably going to have an issue with is the fact that how do you know when they're actually going to take off, right? You don't. You don't know if it's going to be this candle, that candle. You don't know. You really don't, right? What you do know is that you know that what their behavior is doing, and they're just collecting contracts. Once they have enough contracts, that's when they'll move up and get out of there, right? And so that's what basically what they did the first 4 hours of this London session, right? And then they finally moved up, and they went up and got out of there. Okay, now here's what I want you guys to notice is that this move was about 32 pips. Okay, the real move that they were going for on this was not this being a type 3 setup. Okay, they were just collecting contracts here, okay, to get traders into trades. This right here, this move here, is a false move. Okay? The reason that they did this move is because they didn't have enough people convinced going long. Okay? So because they didn't get enough people here to go long, they're like, I'm going to show you long, right? and they go ahead and they break yesterday's high and they go up 32 pips. Once they have enough, they reach, look what happens here. They get up to what, 70, let's call it 72,700. And they're like, look, we're not going past 72,700. Okay. And sure enough, once they have enough, 9 o'clock comes, start of the U.S. session, boom, they drop. They have enough contracts. They've basically sold, right? So people are buying, they're taking the sell on the other side of all those orders, right? And so, of course, now they can just drop and drop and drop, right? Do you get what I'm saying? So look, that was a good 140 pip drop. And they spent all of London, all the first half of London doing it, setting this move up. You see that? So, one of the key things is this. If you see this happening, and they're doing nothing but straight moving sideways, 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 they're not going anywhere. Let it go. Let this go and let them show you what they're actually doing. Okay? Because when they do this during the London session and they're just moving sideways, 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 you're going to see that this basically leads to a setup that happens during the U.S. session. Okay, so this behavior here is a big clue that they're just collecting contracts for a move that's happening during the U.S. session. Because they spent literally 4 hours collecting this stuff through London. Okay, so I wanted to show you this example because some of you might take this trade as a type 3 and it's really not a type 3. But I want to show you so you know exactly what they're doing. All right? All right, so here's, let's take a look at this example here as well. And as we play this out, I want you guys to notice what's happening. So on this particular setup, you see that we move outside of the range here by maybe, 5 pips or so. Come back, hit it again, and then we drop, right? So some people might think that this right here is a type 2 setup. Okay? So if that's the case, remember what I said if this is what you think is the high of the day, they should not have an issue getting past the middle of the range, right? And so what happens here is what? What happens? They get stopped, and then they take off, right? And when you're in this move is essentially a slow and steady pace. Slow and steady, slow and steady, slow and steady for 6 to 8 hours. Look. Do you see that? All the way from here, straight across. Okay? From here, just straight across. So now we're talking, it's about 35 pips or so. Okay? But you can see that essentially we're moving slow and steady, slow and steady, slow and steady. Okay? what you think is a type 2 is actually a type 3. All right, so here's another one. As we start moving, look, you don't have a second leg here, so you may not see this as a type 2 setup, but I want you guys to see what happens here. We start from the Asian range is about 20 pips. And just so there's no confusion, this yellow line here, this line here is yesterday's high. This is last week's high. Okay? Just so there's no confusion. So we see that we basically come out of the range. We go immediately to previous week's high. We come down to the middle of the range, go back up, come back down and retest it. And then now we're going to go ahead and start taking off. You see that? So look what happens here. Here's what happens. If you take this trade here, okay, you're going, you're working, you get these spikes down that happened, right? These spikes down typically are going to scare you, okay? Now, why should you not be scared? Because number one, the candle, right? You wait for the candle to close, number one. Okay, if the candle didn't close up here, that level is still held and protected. Okay, so don't be scared of these kind of candles. Wait for the candle to close before you make any kind of trading decision. All right, just wait for the candle to close, because look, you're going to get these wicks here that are meant to scare you, that are meant to try to take you out of trades. But in reality, I mean, look, they just keep going up and up and up and up and up. Okay? 68 pips. And you see again, when we saw the previous example, where they did nothing but move sideways during London, same thing here, right? They didn't do anything but move sideways. Look, the setup was when? The U.S. session, right? There's your setup. Okay? So I hope these type 3 examples here that I'm giving you are opening up your eyes to what is going on and what you should see as a type 3 setup. All right, so let's take a look at this one here. As you can see, we're playing out. And look, we're coming out from the middle of the range, going straight up to the top of the range. Right here, we're getting rejected. And then we're coming our way back down. Look, it's not even going down to the middle of the range. You see that? Look. Here, a lot of people would have been like, hey, look, first leg is here, second leg is here. This is the type 2 setup, right? We're basically rejecting off of yesterday's high up here. And so this is going to be a type 2 setup. Okay, cool. Well, if you take it as a type 2 setup, right, look what happens when you get to the middle of the range. It's like you're hitting a brick wall, right? Look, as soon as you see this, it should trigger into your brain what's happening. Because now it's done. Look. See that? If this is really the high of the day at this point in time, there's no reason to get rejected from the middle of the range. Okay? There's no reason for it. The real move is going to happen going the opposite way. Okay? So there you go. There's a 40 pip range right there for the U.S. session. All right, so keep that in mind, guys. There's no reason for this to get stopped and hit a brick wall in the middle of the range. The only reason that this is happening is because this is not the high of the day. And this is not where they want to go. All right? All right, I'm going to show you one more example here of a type 3 setup. Now, this particular type 3 setup I want you to pay attention to because it literally happens so quick. Okay? So literally, Asian range here, and we're literally go straight from the bottom to the top. And remember, here's the thing, 13 pip range, right? So the range is really small on this. Okay? So here is an example of a trade that essentially you'll probably miss out on. And that's okay. Okay? Because it just happens so quick that you don't get a chance to respond. Okay? But here it is. So you come down, go right up. You're basically right at 3 o'clock. It happens so early too. Okay? And then it just works its way down, right? There's nothing you can do. The only opportunity that you actually have to get into this trade is essentially US session, a continuation, and it's not even a type 3 type of setup, okay? Where it comes down, comes back up to retest, stops out the bottom, and then goes down. And boom. Now, when it comes to the timing aspect of each pattern, the most important thing that I can tell you is, as far as the timing goes, the second leg of the M or W on a type 1, 2, or 3 has to be inside of either the London box or the US box. If it's not inside of the box, if the second leg is not inside of the box, you don't take the trade. It's very simple. So it doesn't give you time. It doesn't give you like a option to second guess yourself on it. Is the second leg of the M or W inside of the box, inside of this box, or inside of this box? If that's a yes, and all the other components that we're going to talk about for entry rules are there, then you can take the trade. If it's not inside of the box, you're not taking the trade. The timing and the pattern both coincide and they go together. You cannot trade one without the other. They both work together. If you don't have the timing but you have the pattern, you cannot trade it. If you have the pattern but you don't have the timing, you cannot trade it. Okay? We try to make it very simple, very black and white for you, so you don't have to think or second guess anything. It's just you're basically going through a checklist, asking yourself yes or no, yes or no, yes or no, yes or no.
All right, guys. So I hope that watching this video has brought you some value, and you've gotten to understand more about Type 3 patterns and why I like them so much. So I hope that you've enjoyed the pattern series. There's going to be one more video coming up next. And in the next video, we're going to talk about some of the nuances between all three different patterns. And in more detail, what are the differences between them that we can use to our advantage to trade the financial markets. Thank you so much and enjoy the rest of your night. Guys, if you need any more help, please join us on FXM Plus. We have just about another 2.5 weeks to go for the special on FXM Plus, which is getting the Blueprint Summit videos available to those users who sign up within the next 2.5 weeks. All right, guys, if you need any more help, join us on FXM Plus. We have weekly sessions every single week, every single Sunday. We have them Q&A sessions. We talk about the upcoming week and everything like that. You guys can ask as many questions as you want. And most importantly, we're just there to help as a community. Enjoy this week's trading And always trade safe and trade consistent.